Most households manage large purchases through payments, not cash. If you're not offering financing and you're just taking check, cash, or credit card, you're missing out on a large portion of these deals. Most of these customers, they're not going to tell you they don't have the money. They may really like us, they may really want to do the project. If you don't give financing, they're just going to politely decline.
Hey, everybody. We are back with another episode of the Build to Win podcast. John Kolbaska, owner of Windows and Doors by the Men with Tools, and Jonathan Weinberg, owner of Builder Prime. All right, we got some really interesting things to talk about today. I think it's going to be another really good one. John is going to give away a lot of his, I don't know if I want to call them secrets, but just some great tips and information about how he uses financing in his business that I think is just going to really resonate with everybody and be just really useful for anybody that's been thinking about using financing, not thinking about using financing. I've been trying, but never been able to get it, fully rolled out. We got some really good stuff we're going to talk about here today.
It shouldn't be a secret by now, Jonathan. The one common thing you'll find with companies in our industry that are doing large numbers, large sales volume numbers, they're leading in with financing.
Yep.
So we're going to talk about why that's important today.
Yeah, I mean, you hear it over and over, right? I mean, any trade show or any conference you go to, that's what you hear constantly over and over. If you're not offering financing, if you're not leading with financing, if you're not selling financing on a majority of your jobs, there's something wrong.
That number that you consistently hear is more than 60%. And it varies. I know companies that are doing hundreds of millions of dollars where 90% of all of their deals are financed. A friend of mine that claims that he will not take anything but financing. So he won't take cash, check, or a credit card. He leads all of his customers to financing. Claims 100% of his deals are all financed. And that person is doing over $100 million. It's working, right? So when I talk to some of our other buddies that we know in the industry, 20, 30, $50 million companies, even $5 million companies, they're typically leading it with financing. I suggested talking about this topic because I remember, early 2020, 2019, when I was doing less than $2 million, I had heard how important this was, but I didn't offer any financing at that point. And it's really helped me scale my company. So for most of our listeners that are probably doing less than 2 million, I'd like to educate them on why it's important.
I remember when I was working with you at Men with Tools, I don't know if we were first bringing it on at the time or what, but I remember, looking at Green Sky, Service Finance, like those were the two I think that we were using. But even still, it's such a small minority of the sales where it probably shouldn't have been. If you can go back in time, I'm sure you would do things differently and it would not be the minority of sales.
Up until recently, 30 to 40% of all of our deals were financed. And now we're shooting for that number to be 60% plus. We're trying to drive that up to 90% over the next 12 to 24 months.
But even 30 to 40%, I think, is a lot higher than the average for most, even for the listeners who know they're supposed to be doing it, know they're supposed to be doing more. I would wager that 30 to 40 is probably higher than what most of them are doing.
I'm going to show some data and some stats here. It's going to explain why it's so important and how it can help you land more jobs, win more deals, and make more money.
Let's lay out the basic, information here. And then we can talk about, some logistics or how do we implement, how do we get going, things like that.
Well, the first thing I want to say is the term financing has like a negative connotation, right? People, they hear the word financing, homeowners, they get kind of a little icky about it. We're saying the word financing here. In my company, we call it payment options, right? It's a much easier term. So we talk about, like I said, internally, sales staff, executive staff, we use the term payment options for obvious reasons. So for our listeners, when you're in front of the customer, it's very important that you call it payment options. Never call it financing.
The homeowners are thinking, oh, it's a loan. I don't want to take a loan to do this thing.
Which is really, it's honestly, you think that's a bit ridiculous. Where did that come from, right? Like most people are financing cars, right? They're leasing or financing cars. So they've got some form of a loan, right? I mean, Jesus, People are financing $300, $400, $500 items on Amazon these days. What do they call it?
Buy now, pay later type of thing.
It's like you can finance a $300 item for 4 months, 4 monthly pay. Everything is financed. Everybody, it's the world we live in, right? People purchase on their credit card. Actually, a lot of them don't, but even the people that do, they'll charge their credit card and because they're collecting their points, their air miles. It's just, we've been conditioned as a society to use these payment options, right? But for some reason, when it comes to the home improvements, right, making an actual investment in your home, right? It's like we've all been conditioned, all of our homeowners, like, you shouldn't finance these projects. Are you kidding me? So when you go out and you finance a vehicle, you're working with a depreciating asset. You're financing or leasing a depreciating asset, right? Think about how ridiculous this is. But if you make an investment in your home, you're recovering some of that investment up front. And then luckily, these homes are appreciating at different rates every year. Why wouldn't you use money in an appreciating asset, but you've become so conditioned as a consumer that it's okay to do it for a depreciating asset? It boggles my mind.
It is what it is, right? And payment options is kind of your way of talking about it, or payment options.
We need to recondition the way they think about it, right? You have no problem financing that car and it depreciates over time. Why wouldn't you take that money and invest it into your own house? This way you have some appreciation that's helping pay off the interest. It doesn't make sense to me, right? And then in our business, you have some energy savings that are also helping to pay the interest. So
something else I want to come back to later is how to talk about it in marketing. Do you want to set things up like low monthly payments, in your marketing messages?
you have to be really careful. Google has restrictions about what you can and can't say. Facebook has restrictions. There's different local laws as to how you can say it. You can get yourself into trouble. We don't talk about term loans. We just say buy a whole house of windows and 18 months, 24 months, 12 months with no interest financing, something along those lines. That's all we can say. Or buy windows today, pay it off in 2028 or whatever it may be. So you have to be very specific about how you say it. You can't say buy a whole house of windows and pay $199 a month. That's deceptive marketing practices. So you have to be really careful.
I think you wanted to share your screen and show this presentation. Obviously, for people who are listening, we're going to talk through it. For people who are watching, you'll be able to follow along on the presentation.
So this is just something we just use internally to talk to our sales team about, right? Just to continue to educate them, because this is a big push. We're trying to get our sales team to realize that if we use these affordable payment options, that this will help them close more deals at a higher ticket. It's a win-win for our sales reps and for our company. So this is just a presentation we made for them. So you can see right here along the top, why financing is the most important tool in our sales process, right? How financing helps us serve more customers and close more deals, right? So financing isn't just a payment option. It's the bridge between a homeowner wanting the project and actually being able to afford it today. Reason for that, John, is because reality of our sales environment and most of our sales environments is the average ticket size of my company is $14,000. But most homeowners don't have $14,000 sitting in their bank account for home improvements. Most households manage large purchases through payments, not cash, right? So if you're not offering financing and you're just taking check, cash, or credit card, you're missing out on a large portion of these deals. And guess what? Most of these customers, they're not going to tell you they don't have the money. They're just going to make the typical excuses like, I need to think about it. I'm getting more estimates. I'm going to be doing this in the future. Some of them will save money, but sometimes they don't save enough, right? My average sale is $14,000. What if someone's been thinking about getting their windows done and they only saved $8,000 and they're short $6,000? They may really like us. They may really want to do the project, but where are they going to get that $6,000 from if you don't present financing? They're just going to politely decline. They don't have the extra $6,000. They're not going to do business with you. So that's why it's important, right? So the financial reality of American households, this is pulled up off of research. The number tells a clear story about why cash sales are the exception. It's the exception. It's not the rule, right? $83,730 is the median household income, right? $8,000 is the median bank balance, what they have sitting in their bank account, $8,000. So if I have a $14,000 average ticket and the median bank balance is $8,000, well, it's short $6,000.
That's assuming they want to blow their entire savings account on the new windows.
We talk about that next. So you're already ahead of the process, right? 63% of all Americans can cover an emergency $400 fee, right? So that means nearly 4 in 10 Americans can't cover a small emergency expense using cash alone. But guess what? Those people still buy home improvement projects.
And it's not necessarily a bad thing for them to still invest in. It still can be a very, I'm sure we're going to get to it. It still can be a very affordable thing.
They're investing in one of probably their best asset, which is their home. So 30% can't cover 3 months. Nearly a third of all households have no financial cushion for even a short-term disruption. But even those people, I'll say it again, buy home improvement projects. Some of them have great credit. Bottom line, most homeowners cannot comfortably write a $14,000 check, and they won't. And my sales team for years thought that they could. And I'm sure there's going to be listeners that think that these customers can.
And even if somebody's got $100,000 in their bank account, writing a $14,000 check is not a simple proposition. That's still a big chunk, even if you get $100,000 in your bank account.
It's tremendous, right? So the financing gap, right? When you compare our average job size of $14,000 to what homeowners actually have saved, the math is stark, right? You see right here, our average job cost is $14,000. The average homeowner would need to spend nearly their entire savings account just to pay for a single project in cash. Median household savings, $8,000, right? Most homeowners will never do that, even when they desperately want the project done. Financing removes this barrier entirely. So financing changes the buying decision. Customers don't think in total price, they think in monthly payments and budget impacts when you set it up correctly. Without financing, can I afford $14,000 right now? Most customers pause, stall, or walk away, right? With financing, can I afford $150 to $200 per month? A $14,000 project financed over 120 months becomes an easy yes. The conversation shifts from sticker shock to monthly comfort. And we have AI. We listen. We hear these things during our sales appointments, right? Why top home improvement companies push financing, right? Industry leaders don't leave financing to chance. They make it the centerpiece of their sales process, right? It removes the price shock. Monthly payments feel manageable where lump sums feel impossible for most homeowners, right? It increases close rates. More customers say yes when affordability isn't a barrier. It increases your average ticket. Customers upgrade when they're thinking in payments, not totals. Buy now, not later. Financing eliminates the I'll wait until I save up delay. And there's a lot of that going on if you're not offering financing, right? This is our current numbers. This is what we were showing. The hard truth. 60 to 65% of our deals currently rely on customers paying cash. This is what I was telling you. But statistically, most customers don't have the cash available. This was a presentation to our sales staff, right? February period, financing rate, 35%. 35% of all our deals were financed, right? Every cash-only conversation we have is a risk. We are leaving a massive number of deals on the table. By the way, guess what our financing rate is for the month of March? 78%.
78%.
78%. We changed the way we present it, right? The opportunity is in front of us, right? At 40% financing, many deals die on the table because customers don't want to drain their savings, even when they want the project. At 90% financing, customers can say yes today. The biggest obstacle in home improvement sales, cash availability, it's eliminated entirely. More appointments convert, more revenue is generated, more commissions are earned. This is what we're telling our sales reps. Financing removes the number one obstacle in home improvement sales, cash availability. Financing is a service, it's not a sales trick. When used properly, financing generally helps the homeowner. It's one of the most customer-friendly tools we offer. It protects their savings. Customers keep their emergency fund intact. A major source of financial peace of mind. Upgrades happen now. They don't wait years to save up. Customers get the home improvements they need immediately, and it solves their problems faster. Deferred repairs become bigger, more expensive problems over time. Financing lets homeowners act decisively. The sales mindset shift. This is what we told our sales reps, and this is for our listeners, right? Sales reps who consistently win with financing do one thing differently. They lead with payment options. Payment options, not price, right? Don't say this. Your project is $14,000. This anchors the customer to the total, triggering sticker shock and hesitation. Say this instead. Most homeowners choose one of our payment options that keeps the project around $150 to $200 per month, right? The conversation becomes about comfort, not cost. When you get to the part where you're presenting the price, don't give them the total. Give them 2 or 3 different options, right? Based on terms. And then we give them 84 month and a 120. And then we give them a no interest plan at 18 months, right? So when we present it, we say, Mr. and Mrs. Customer, based on everything we spoke about today, these are your 3 options. Option number 1 here is 84 months at, I'm just doing fake numbers, $260 a month. Option 2, now I'm anchoring, which is our most popular option, is right here. This is 120 months. This will be $179 a month. And for our cash paying customers, we have this 18-month no interest plan. And that breaks down to, if you finance the project, $480 a month. Which of these 3 options work best for you? That's the way we handle it. We used to present it based on everything we spoke about. Total investment for this project is $14,000.
I'm probably stating the obvious here for most people, but when you say it that way, it's like, okay, we can have these different plans, these payment plans. You as the home improvement contractor do not need to manage any of that. You get paid by the financing company 1 or 2 payments or something of that nature. And then the homeowner has the agreement with the financing company. The financing company takes over all risk of the payments. They take on all the payment plans. So it's not like you're taking on risk of them not paying. You're not taking on the administrative overhead and burden of collecting payments or tracking anything.
For some of our listeners that are new to this, it may not be. So the finance companies will charge you a dealer fee. Depending on the plan and the risk involved, it can be anywhere between, I have a free plan that opens up a credit card for up to $10,000. It's 24 months. But most of them, you're 12, 18, 24. They'll run you, depending on the finance provider and how much business you give them, they'll typically cost you anywhere from 3 to 12 points today for 0% options. Your term loans are going to be in the same thing, anywhere from 3 to about 10%, right, of the total contract. What they do is they deduct that fee, and you could do staged funding with them. You can negotiate. Most finance providers, if they do a background check on you and your business credit history is good, your personal credit history is good, they will give you some form of a deposit. Most. Some will just pay you at the end. We've negotiated terms with our finance providers where we get 50% up front and then we get 50% on the back end. We collect the payments through an app. The money goes directly to the finance provider, and then they pay us minus the fee next day. And then they take over all the billing. So at that point, we have our money minus the fee, and now we do build that fee into our cost. We treat it as a material cost. So we build that in, we mark that up. It's just one of our costs. So at the end of the day, it's an operating cost that we incur, right? So at the end of the day, we're still hitting a certain gross profit margin.
If someone's looking for a discount, how quickly will you go to the cash discount?
We don't offer a cash discount.
Okay.
We don't, because what we found is when you give the sales reps an option to offer a cash discount, guess what happens to your finance rate?
Plummets.
35%. Because that's what was happening in February. We were historically 40%. In February, that number was actually lower than 35. I don't know why that's in our presentation. It was probably like 28%. The reps were like, hey, can we do a cash discount this month? And foolishly, I said yes. And then our finance rate dropped. Sometimes it takes making the mistake over and over for you to get the lesson. I saw it again. I've done this in the past. If I give the sales reps the option, that's the path of least resistance, right? So they go to cash. So they're getting more cash jobs. They're selling more cash jobs, but nothing's financed. And then your close rate goes from 35% down to 22%. Like, what's going on? Well, they're not talking about financing. You gave them the option. So we just took it away. We told our sales reps, cash discounts are no longer an option. You sell it, whether you finance it, whether they pay check, credit card, cash, it doesn't matter. It's just a fee. It's an expense that we build into our cost, and that's the way it is, right? And it might even be illegal to charge customers less for cash than finance.
Even as I was saying it, I was thinking, oh, I'm not even sure you're allowed to do that.
I don't think you are, honestly. Look, at the end of the day, you have smaller contracts like, hey, you pay me in cash, I'm going to save money on taxes. Now, plus every dollar that my company generates goes in the bank, right? Like, we're so big at this point that it's like, you'd be foolish to try and cheat these taxing authorities. It'd be crazy. Just all the money goes there. At the end of the day, you deal with your accountant, your bookkeeper, you pay your taxes, you can sleep at night. You make more than enough money. Although, like we were talking about in New York City, it might be time to move soon with all this crazy stuff that's going on here. But at the end of the day, like I said, the fee is an expense, just like your rent, your insurance payments, it's all built in.
You want to keep going with the presentation here?
So you see, like right here, you help more homeowners, you serve more who want the work done but can't pay, increase the close rates. It's not an option. It's one of the most powerful tools in our sales process. The bottom line, people rarely buy based on price. They buy based on payment and affordability. We tell our sales reps, your job is to go in to the customer's home, right? Become the trusted advisor, ask great questions, determine what it is that the customer wants, show them what they need, right? Listen, present, and then come up with a project that's affordable. So we tell them, that's what you're there to do, right? So affordability is based around financing, payment options, right? So people rarely buy based on price. They buy based on payment and affordability. Present financing first. We don't even talk about the total price, right? Lead every presentation with monthly payment options, not the total price. More homeowners say yes. More deals close, more revenue is generated, more commissions are earned. Make it the default. Financing is not a backup option. That's what we used to do before. It should be the default in every single presentation. So before we were doing this, we would give 4 options. We would say total investment for this project is $14,000. And then we have these 3 finance options. We took the total investment out. We don't even want the customer thinking about the total investment. We have this option here at 84 months. This option right here in the middle is our most popular option at 120 months. And then this is for our cash paying customers because it's 0 interest, 0 payments, right? Now, sometimes the customer will ask, okay, that's great, but what is the total price? And then we just say to them, okay, well, were you thinking about paying for this in check, cash, or credit card? And let me see. If they say, well, I'm going to pay cash, you show them the total price. Mr. and Mrs. Customer, total investment here is now $14,000, but we go right back. And for people that are paying cash, we find that most of our customers that pay cash, they use this option right here. This way they can hold on to their money a little longer. It's 18 months. It's 0 interest, 0 payments. There's no prepayment penalties. This is what most of our cash paying customers do. Which of these options work best for you? We bring it right back.
Even for the homeowners who can easily afford the $14,000 price tag, right? If you can get a 0% loan on that and have that capital deployed elsewhere, earning interest, you're getting arbitrage, right? It's even for the wealthier customers that you may be dealing with, it's still
Jonathan,
a more attractive option, right?
We don't get to see customers' credit scores, but you can kind of get a good sense of who's doing really well for the most part. They typically buy the no interest plan. You see it because they're smart with their money. They'll go 18 months, 24 months, and they'll say exactly what you said. Well, I'll take this $14,000 and I'll collect, 7-10%. I'll throw it in my investment account, whatever it is that they have set up. And I'll make the money and I'll pay it off in 18 months. And there we go. I've got some free earnings, basically.
This is a pretty silly example, right? My wife and I went to buy, new mattress and a new bed with the fancy, lift up, and you can go incline, decline, heads up, feet up.
Ah, you're getting old.
Yeah, I guess I got one of the senior citizen beds. They gave us the option of like, hey, you can pay a 0% loan. I could have paid cash. I mean, like, we can give you a 0% loan. Like, Yeah, all right. Why not? I'll do so. I still pay, whatever this small monthly payment is every month. I'm still paying off my new beds. I got the money deployed elsewhere.
You have a 0% with minimum payments. We have those options available, but then you also have other plans, 0% with no payments. So they'll send you a statement every month. You just have to pay it off, right? So you can, with our plans, with some of the plans we have, you can finance it today and pay nothing 18 months. You just got to write that check before it expires. But people who are smart with their money, they know this, right? And they do it. And then even our customers that are buying the term loans, they might take 120 months. They might even sometimes go out to 180. Because what we found is, I don't have this data in the presentation, the sweet spot for customers as far as payments when it comes to the home improvement industry is to try to get some form of a loan, a term loan, people that are buying terms for $223 or less. That's affordable, right? Most customers can swing that into their monthly budget. So if you have a project like $14,000, I forget the numbers. I don't have my finance calculator here with me, but our average project, if it's financed out over 120 months, it's like ridiculous. It's like $130, $140 a month. If you have a larger project that's $30,000, we'd swing that term out to 180 months, right? It brings it within that sweet spot. It might be like 210, 220. I'm not doing the math, but you get my point. You swing the term out longer on a more expensive project, it brings it back to within that sweet spot. And with our finance providers, there's no prepayment penalty. So, people come into money. Most people come into money every year when they file their taxes. They're getting money back. They may make the decision to pay it off next year and finance it now.
Would people stay in their homes on average 12 years or something of that nature?
7 to 10 years, but with the current market, with the interest rates, most people are staying even longer than that today in 2026.
Yeah. So, but even if you talk about it as 7 to 10 years or 12, whatever it is, even if you're doing 180 months, right? That's 15 years. Well, if you decide to move beforehand, you're going to sell the house, you're going to get the capital from the sale and just pay it off. And you don't have to think about it, right? And not only, like, if you're talking about pitching the value, if you're competing against truck and a truck down the road and they're not offering this.
Most guys in the truck don't offer financing. Yeah.
It's just another arrow in your quiver, right? It's another part of the sales presentation that is a value add.
It's not an arrow. It's a bazooka, right? No, seriously, if you're serious about growing your companies, it is one of the most impactful things that you have to learn to make a part of your sales process. And anybody that's doing significant revenue in this business will tell you, it's a goddamn bazooka.
These might have been just sample numbers, right? But you said we're not offering financing. Our close rate drops from 35% to 22%. Do you really see an improvement in close rate that's that drastic when offering financing?
Absolutely. I mean, just going based on the numbers, 40% of homeowners don't even have $8,000 saved. I've heard some discussions on this. I can't recall exactly, but when you look at your opportunities, your demos, 1/3 of the customers should choose to do business with you. The other third will do business with your competitors, and the other third will not do anything at all. Well, that third that doesn't do anything at all, it's because they can't afford it. They don't have enough money saved up for it. Even though they may have been in interest, they quickly realize that this is not affordable today. Because most companies are not offering these affordable payment options. So you can grab that whole third, a portion of that third, and with financing, with affordable payment options, you can make that affordable, attainable for them today. So you can improve your closing rate just by doing that.
I want to come back to the marketing side of it again, because this is a really powerful tool, right? Or bazooka. But what about the people who aren't picking up the phone and inquiring because they're thinking, oh, there's just no way I can afford this right now. So they're not even asking, they're not even calling or filling out a form or whatever. How do you get that message out about how affordable these products and services are that you offer? I mean, obviously you talk about putting in different ads in the 0% for 24 months or whatever language you're allowed to put in there. How do you get that kind of message out? Do you think about that?
Right now, the only way that we can do that is by just talking about buy windows or buy doors today and pay nothing until 2028. You really shouldn't be giving figures. Like I said, it can get you in trouble. We used to do that years ago. Get a whole house of windows for $199 a month. The problem was that there were companies that were, advertising ridiculous payment terms, and they would get a customer in there, and the $199 a month for a whole house of windows was $400, and there were complaints made to the attorney generals and whatnot, and I'm sure they've been sued or closed up for deceptive marketing tactics. It's just something we don't play in with as far as the term. So we just talk about, no interest financing, buy today, pay nothing until 2028 or 2026. They kind of get that, hey, that's a thing. But yeah, we don't talk about terms and numbers. You're not allowed to.
So last thing I think for today is for our listeners who are not using financing or not using it a lot, what does it look like to get started ASAP and implement similar processes to what you have with the financing? If they're listening to this today, what should they be doing today and tomorrow and getting this rolled out for their company?
First thing you have to do is find a couple of reliable finance providers, right? So list of those companies, you can probably help me with this list because you travel to the trade shows. It's Upgrade, Green Sky, Service Finance. Give me some more, Jonathan. You've heard of them.
We have like Green Sky and WiseTech integrations in Builder Prime. There's One in Fund.
One in Fund is actually a useful tool because they're a program that can work with multiple finance partners. So you can submit an application and they can run that application to multiple finance providers that you can choose and pick plans, and they can return the best options for you, for your customer. So they can help with that. We do everything internally. We have a couple of our own providers that we have our own terms with. But for someone that's getting started, One in Fund's an excellent option because they can work directly with One in Fund. They can have multiple finance providers immediately the day they sign up. That's actually a great suggestion for someone that's looking to get into financing. That's probably the best option. But you want to obviously look at the different programs that are available, what the dealer fee is, correct? Choose 3, 4, 5 options. I like 3 different term loans typically, and then 2 or 3 different zero interest plans for your cash buyers. Figure out what those fees are going to be once you have them finalized. Build them in to your estimates, right? And again, it's a cost, right? Take the average, figure what that percentage is going to be so that you're not paying for the customer financing. The customer should pay for it. And then just train it into your sales process. Present it a completely different way. It goes from, your total investment or the total price, however you deliver it, is X dollars to these are your 3 options. I think you should always present 3 options, no less, no more, right? No more, because if you give a customer too many options, you create indecision, right? But I like the 3 because it gives them, we found that that's been the perfect number. It allows you to anchor to the one in the middle, right? So this is our 84-month plan at $209 a month. This is our most popular option, our 120-month plan. Most of our customers do this. This one right here is $159 a month. And for our cash buyers, we have 18 months, no interest, no payments right here. Which of these options work best for you? Didn't talk about the total price until the customer asks. And most customers will ask, and how you handle that is fine. You just say, oh, okay, sorry. Like I told you before, in our presentation, we have a little slide that talks about 92% of our customers use financing, why it's smart. If they want, they can email us at the show, or maybe I'll get the slides. I'll share it with our listeners. Maybe we could put a link to it. There's 5 or 6 slides in our Engage presentation that sets this up. We just say to them, oh, no problem. If our customers are using one of these options, 92%. Are you the 8% that wants to pay in cash? Just because you want to act surprised.
But it also normalizes it for them, right? So we're talking, there's that aversion to doing it. It's like, oh, 92% actually do this. Okay.
Most people want to know the total price. Very rarely we have a customer say, well, I'm just going to do $129 a month is great. Let's sign a contract without knowing the contract total. Yeah, I mean, when you sign a contract, you have to put the total amount in, right? So at some point, you've got to address the price. So they'll ask, most of them will ask, how you handle it. It's like, oh, okay, I get that. And so, like I said, 92% of our customers choose one of these options. You're paying cash. We have this 0% option here. I'm just guessing you want to know what the total price is, correct? Okay, no problem. total investment for this project is $14,000. Now, like I said, and I go right back to the price presentation. Being that you say cash, this is for our cash buyers. I remind them again, and then you have these other two options. Which of these work best for you? Because again, 92% of our customers, we talked about it in an Engage presentation, choose one of these options. It's normal. You don't have to feel odd, even though you might not have thought about financing this project beforehand. It's completely normal. 92% of people do it, right? That's how we get into it. And then you'll be surprised. You'll find that you're talking payment terms or finance programs with the customer, and then you're not talking about total price. And when you discount, you can do all of that stuff, but you're discounting now for the total price, but you're not showing them the total price going down. You're showing the payments go down, right? Customer will say, well, that's great. Is there any way I can get this whole house of windows here for under $200? So, well, yes, if we extend this term out to 180 months, at this interest rate, it will get you comfortably even less than that. It's $150 a month. And again, there's no prepayment penalties. So this is something that you can make it affordable for now. And whenever you come into some money, you could pay it off. You don't have to go the full 180 months. Most of our customers don't. They typically pay these off within like 3 years. And we have that data. That's not a lie. Our finance provider shares that with us. And another great thing about the finance providers, if you have a really good relationship with them, they will tell you when the customers pay off their loans. So it allows you to remarket to your customers. Lots of customers will come in and finance one part of the project, and they'll tell you, I'm going to do this half of the house today, right? And when I'm done paying this off, I'm going to call you back to do the second half. Well, we get a report every month from our finance provider that says these customers paid their loans off. So we get on the phone, we call them, we email them, hey, just letting you know, we've got this special promotion going on right now.
Yeah.
Talk about financing, and you'd be surprised how many customers come back. Yeah.
That's one I never even thought about.
This is why financing is so important. Remind me, Jonathan, to get those slides from our Engage presentation, how we set up the financing discussion when we're presenting price.
We'll link the presentation that you shared today. We'll link that as well. And just to quickly recap, right? So go find the financing provider today. If you don't already have one, check out somebody like One & Fund.
That's where I go if I was starting out today.
There's probably going to be some kind of training that your sales reps are going to need to go through and to get certified and approved to be able to offer the financing.
Choose the plans that you want to offer. Like I said, you can have 3 term loans, 3 no interest loans, but you can have 5 or 6 or 7 that you're going to go to. But when you present, you're only presenting 3 options to the homeowner. Figure out what those costs are going to be, and then build it into your pricing.
Build it into the price presentation. If it's you that's going out on appointments or you've got a sales team going out on appointments, work that into the presentation. And like I said, take away the cash discount.
No more cash discounts. Don't do it. You'll only hurt yourself. For whatever reason, salespeople, they like to take the path of least resistance. Most salespeople, if you offer it, they will offer it, and you'll see your finance rate go down, your closing rate go down, and you say, oh, why did I do that? We found that out in February. Even though I may have learned that lesson 2 years ago, I forgot, and I had to relearn that lesson. But now it's one of our disciplines. We do not offer cash discounts. We're a same-day close company. Some of our listeners are not. Regardless, it can work for you whether you close same day, if you do 2-step process, 3-step process. It's not going to hurt any of your results for sale. It is invaluable. So commit to it. Commit to becoming a finance-first company. Affordable payment options.
I've heard a lot of presentations, a lot of people talk about it at conferences. I don't think I've ever heard it put as convincingly and usefully as what you just laid out here, John. So yeah, there should be no question. If you're not doing it, if you're not doing what we're talking about here, get going.
I am not being compensated by any of these finance providers. As a matter of fact, they charge me and they'll charge all of you a fee to be able to use their services, right? But at the end of the day, close rates go up. You make more money as long as you built those fees in. You close more deals. You win. What's your tagline for Build a Prime?
The ultimate tool belt or all-in-one operating system for your home improvement company.
What's your old one?
Save time, win more jobs, earn more money.
That's the perfect tagline for offering financing. Do you have anything to add in about financing that you see on your end on the CRM side?
We have integrations, like I said, with both Green Sky and WiseTech. Those are the two options we offer now. It makes it easier, of course, to build it right from your estimate. It saves time in getting those applications done and the information flowing back into the CRM again. It's a great tool and everybody should be doing it, even if it's not one of the ones that if you're a Builder Prime user and it's not one of the ones we integrate with, we still have the ability to kind of build that into the way that you create your estimates and calculate out the monthly payments and things like that. This has been awesome. Thanks, John. I think this is going to be hugely valuable for the listeners, and we'll be back at it again in a couple of weeks. Thanks everybody for tuning in, and we'll see you again next time.
Financing, guys, use that financing, affordable payment options. Bye-bye.